Good morning, students. In the previous class, we discussed about what is meant by trading account, what is meant by non-trading. Okay, in trading account, the trader will run that organization only for the purpose of profit. But in case of non-trading organization, the non-trader always serve for the society, not for the profit motive. Okay. In this chapter, we are going to discuss about what is meant by capital expenditure, capital receipts, like that. In trading account, trader prepares only three account like that: trading and profit and loss account, trading account, profit and loss account, balance sheet. In case of non-trader, non-trading organizations prepares three accounts: receipts and payments, income and expenditure account, next balance sheet. Okay. See here in the previous class recap, meaning of trading and non-trading concern, differences between trading and non-trading concern. Already we see. Okay. Meaning of payment and expenditure. Payment and expenditure. Payment means actual cash paid, means cash is going outside. Payment can be made for current means current year, past means past year, future means upcoming year. Means payment may be done for current, past or future, whatever it may be, it is called as a payment. Means cash going outside. Expenditure differs from payments. A payment may be deferred expenditure. Payment and expenditure should be different. But expenditure need not necessarily be a payment. Expenditure includes all expenses incurred, whether paid or not. But payment is that amount which is actually paid. Amount paid for purchasing an asset is payment. Amount paid for wages is an expenditure. Okay, purchasing an asset means it is a payment. Paid for wages is an expenditure. So coming to expenditure, different types of expenditure: revenue expenditure and capital expenditure. So first of all, we go through capital expenditure. The expenditure incurred for acquiring the permanent assets. Acquiring means getting the permanent asset means purchasing the assets. For that we have to pay some money to outside person. It is called as a expenditure. It is called as a expenditure. The expenditure incurred for acquiring is nothing but getting the asset. How will we get the asset? Only by purchasing. How can we purchase? By paying the money to some other person. It's called as a capital expenditure. This expenditure intended to benefit periods beyond the current financial year. The expenditure intended to benefit periods beyond the current financial year. The expenditure may be belongs to current, past or future. It's called as a capital expenditure. The continued results in increase the capacity of the existing fixed assets. Means capital expenditure used to increasing the capacity of the fixed assets. Results in efficiency of the existing fixed assets. Means by paying the money, it is for expenditure, it is used for longer period, means purchasing assets. Results in prolonging the life or economy of operation of the existing fixed assets. Next, examples of capital expenditure. Cost of acquisition of permanent assets. The cost, the rate of permanent assets. Permanent assets means fixed assets, means the asset which is used for more than 10 years, means it's called as a longer period, it's called as a capital expenditure. For example, permanent assets or fixed assets are land and building. Land may be existing for more than years, and building also, machinery also work for more than 10 years. The furniture also work for more than 10 years. Goodwill, patents, trademark, design, patents, loose tools, and other equipments, hospital equipment, research equipment, etc. Sports, goods, library, books, investments, these are all comes under permanent assets or fixed assets. For acquisition of these type of assets, we are paying some money to outside person. It is called as a expenditure, means capital expenditure. Capital means it is used for a longer period, means more than 10 years, like that. Okay, the example of capital expenditure. Example, cost of installation of fixed assets. For example, we are getting fixed assets, newly we are getting fixed assets. For that we have to modify or adding some external parts to that assets. It is called the cost of installation. And lights and fans may be existed for more than 10 years. Cost of addition and expansion, improvements, alterations of fixed assets. Alteration means some modifications. Cost of development, research and development, experiment, sorry. Income means money earned. Income means getting money inside, getting money by doing some activity. It is called as a income. Money earned, whether actual received or not. Income is always related to a time. It's a time period. Okay. Next, coming to meaning of receipts. A receipt is actual cash received. Actual cash received is called as a receipt. May be received for any period. Any period means any year, means current year, past year or future year. Okay. Maybe it is capital revenue, capital income or revenue income. Capital income means it is used for more than 10 years, means longer period. Revenue means it is for only the current year. Okay. So coming to meaning of receipts. A receipt is different from income. Okay. Receipt may be a capital or revenue in nature. Receipt may be is a capital or revenue. Cash received for any period is receipt. Cash received irrespective of years, it is called as a receipt. But income is money earned whether actually received or not. Income earned in past called income of the past, but not of the present period, even though actually received during the current period. Okay. These are receipts by sale of property. But in case of same as capital expenditure, in that case we are purchasing. Okay, means cash is going outside. In case of capital receipts, income is getting from outside, means selling the property. By selling the property, we are getting money. Means property means permanent assets or fixed assets. Okay, these are of permanent nature receipts. These receipts are capitalized. Capitalized means this is belongs to longer period, means more than 10 years. Okay, these receipts are not to be used to meet current expenditure. Current expenditure means revenue receipts, like, okay, capital for 3, that is future, past, current. Okay, they are not recurrent in nature. Okay, the see once again. See once again. Already we know that in every organization, business organization, they prepares different types of accounts. The first one is journal entries, ledgers, cash book, purchase book, sales book. Okay, and prepares financial accounts, trading account, profit and loss account, balance sheet. Okay, this is called as a final accounts: trading account, profit and loss account, balance sheet. Whereas coming to non-trading organization, they prepares 3 accounts, that is receipts and payments account, income and expenditure, and balance sheet. And we know that a trader should always look after to earn more profits, more and more profit, and he always thinks about how to develop, how to get more profits, how to expand our business organization, our trading organization, like that. There are different evaluations in trading organizations. The first one is sole trader. The sole trader means solely, means only one person can run the business organization. This is called as a sole trader. He is the worker, he is the labor, he is the owner. He is the responsibility for everything. Either he gets profit or loss, whatever it may be, he is the responsible, means solely. After that, day by day, after a long time, the partnership came. Partnership means minimum 2 persons or maximum 20, like that. Okay. In partnership, compulsory to form a partnership act or partnership organization, compulsory we have to follow rules and regulations which are kept in Acts 1932 Act Section 4. Okay, we have to follow the rules of that. Okay. Next one, in that 2 persons or 2 to 20. Okay, one person will look after the daily affairs of the organization, partnership organization, and one will be look after the bank transactions, and one will be at like that. Okay. Next one, after that, Evaluation joint Hindu family. Joint Hindu family means by grandfathers the business will adopt like that. Fathers, uncles, like that. Okay, all will do the business. A later cooperative societies means the members will form together to form an organization. Form together means voluntarily, not uh, okay, voluntarily. It's only for service oriented. Okay, and the later joint stock company. Okay, joint stock company means like that. So many peoples are partners in that. It's called as a shareholders. Share is nothing but the some portion of the capital, like that. This is one side. The coming to another side is a non-trading organization. Just now I said, or already we discussed in the previous class, that non-trader will always look after to serve the society. To serve the society. Next, in this, some terms are there, payment and expenditure, like that. Already we discussed. Payment and expenditure may be different to each other. A payment means actual cash paid. Payment can be made for current year or past or future period. Okay. Payment and expenditure. Expenditure differs from payment. A payment may be expenditure, but expenditure need not necessarily to be a payment. Expenditure includes all expenses, whether it is incurred, whether paid or not. But payment is that amount which is actually paid. For example, amount paid for purchasing an asset is payment. Amount paid for wages is an expenditure. Next, capital expenditure. The expenditure incurred for acquiring the permanent assets, like that. This expenditure intended to benefit periods beyond the current financial year. Okay. Capital expenditure results in increase the capacity of the existing fixed assets, results in efficiency of the existing fixed asset, results in prolonging the life or economy of operation of the existing fixed assets. Next, examples of capital expenditure. Cost of acquisition of permanent assets. For example, land and building, machinery, furniture, goodwill, patents, trademark, design, patents, loose tools, and other equipments, hospital equipments, research equipment, etc. Sports, goods, library, books, investments. Next, cost of installation of fixed assets and of light and fans, etc. Cost of addition, expansions, improvements or alterations of fixed assets means doing some modifications or alterations to fixed assets. It belongs to capital expenditure. Cost of development, research and experiment. The coming to income, money earned whether actually received or not. Money earning whether actually received or not. Income is always related to a time period. Income is always related to a time period. Meaning of receipts. Receipts means getting the money, earning the money from outside. A receipt is actual cash. Actually, cash is how much cash may be received for any period. Any period means either it is belongs to a current year or past year or future year, whatever it may be, whether it is income or not. That point should be remembered. Okay. Maybe the past, present, future. Okay. Maybe capital or revenue in nature. Capital means it belongs to future, past, current. Whereas coming to revenue, it is only for the current year. Okay. Meaning of receipts. Receipt is different from income. Receipt is different from income. Receipt may be capital or revenue. Receipt may be capital or revenue in nature. Cash received for any period is a receipt. Cash received for any period is a receipt. But income is money earned whether actually received or not. Income earned in past called income of the past, but not of the present period, even though actually received during the current period. Next one, capital receipts. These are receipts by sale of property. These are of permanent in nature. These receipts are capitalized. These receipts are not to be used to meet current expenditure. They are not recurring in nature. Like